Hi, welcome everybody. SF Live episode 264. And as you can see, I'm back in Frankfurt. I'm in Germany. It is DGM week. We're hosting Deutsche Goldmesse this Friday and Saturday in Frankfurt. Really looking forward to seeing everybody again in person here in my hometown. Got an excellent lineup of keynote speakers, fantastic companies joining us, 23 in total. So make sure to come out to Frankfurt. It's free to register. It's at deutschegoldmesse.com. It's a German gold show, so you can find us there online as well. Looking forward to seeing everybody in person in Frankfurt this weekend. And you already see him on the screen. My guest today is Ernest Mast. He's the president and CEO of Dore Copper. And they put out a PEA just a couple of weeks ago. And Ernie and I have been playing phone tag and trying to connect. And I've been traveling, he's been traveling. And we finally get a chance to catch up about the PEA. Now that the dust has settled a little bit and the market has communicated some feedback, we get a chance to catch up with Ernie and digest together the last couple of weeks here of the PEA, or with the PEA out now. And we're going to follow up with some things with Ernie here, input costs and other things, and just follow along for the conversation. And we'll see where we get to and discuss some next steps as well. Ernie, it's great to see you. Thanks for coming on again.
My pleasure, Kai. Good to be on your show again.
Yeah, for sure. It's always great to have you on. It always means there's some decent news out and some news to talk about and worth talking about. This time it's the PEA. You put it out for the project in Chibougamau. Why don't you run us through some key highlights of the PEA, and then I'll of course have some questions lined up for you.
Okay, great. So in the PA, we did it on three different deposits: the Corner Bay deposit, the Devlin deposit, and the Joman deposit. For the Corner Bay deposit, we updated the resources, and so now we're at 8.5 million tons at 3.19% copper. In this PA, we employ a hub and spoke strategy where we start with the Devlin and Corner Bay properties feeding the Copper Rand mill. And then when the Devlin mine becomes depleted, we commence operations with the Joman operation. The PEA has a 10 and a half year mine life, and we're producing an average of 53 million pounds per year of copper equivalent. Our all-in sustaining cost is $2.24 per pound. The 10 and a half year mine life has a peak production of about 90 million pounds in year six. And that's when we coincide with the operation of the Joman mine and some high grade areas at Corner Bay. And it really shows you the potential we have for higher production levels compared to this PA. We have an initial capital of approximately $181 million. And then the project's finances are after tax NPV of $193 million and a 22.1% return. That NPV is at an 8% discount rate, and pre-tax, we have 367 million NPV with a 30.7% IRR. So the economics of the project are robust. We did the pricing at 24-month trailing average, so 375 copper, and as you know, price of copper has been above $4 for the past year, and a gold price of 1,820, which was the trailing average for the past 24 months. The perception may be the gold price is a little high, in that gold has been very volatile, but gold really has very little impact on our financials. For instance, for every $10 change in the price of gold, the NPV moves by about $1.5 million. We were very focused on using a process in terms of establishing the pricing and also the foreign exchange, and we decided to use the 24-month trailing average. So all in all, the company is very happy with the PA. We really show how we can restart the Chibougamau mining camp with a 10-year mine life and producing 53 million pounds per year of copper equivalent, obviously at very good margins.
No, fantastic. Lots to unpack in there as well. So I'm going to dive right in. You mentioned peak production is going to be about 90 million pounds copper equivalent. And one of my things that I always look for upside when I see studies like that, PEAs are always early stage. It's never going to be the final product until it gets to feasibility study. How do you see that, or the volume and the annual production sort of level out to degrees? Like I want to see the production upside, right? So I don't want to see 45 knowing that you can do 90 in year six. So you're obviously planning for more production capacity. How do you see that? Or can you fill that overall and maybe bring it up to 90 throughout?
Yeah, that's definitely possible because we have extra milling capacity on the grinding side. The In the mill, we actually currently have an arrangement where there's one rod mill and four ball mills with a total of 2,200 horsepower. With the project, we've decided that we would install one ball mill with about the same power as we currently have installed, and that's going to replace those five existing mills. We're going to have ore sorting at the Corner Bay site, which reduces the amount of tonnage going to the mill. So in effect, the milling capacity is in excess of 25 to 50% more than we're showing in the PA. So if we can identify or acquire other deposits in the camp, we have the additional space to fill the mill, and therefore our annual production will go up. Secondly, in the PA, the Joe Mann mine has a mine life of 4 years. However, in reality, when we put the Joe Mann mine into operation, we would expect it to have an 8-year mine life. And the peak production in the PA is when Joe Mann is contributing 15 to 20 million pounds per year of copper equivalent, which is about 30 to 40,000 ounces a year of gold. So you can imagine a situation where we have Joe Mann running with Corner Bay producing about 50 million pounds per year of copper, and Joe Mann producing about 40,000 ounces a year of gold over, say, a 6 or 7 year period, as opposed to a 2 to 3 year period, which we have in the PA. So there's actually tremendous upside for the company with respect to the PA. And of course, if we're at those higher production levels, we're going to have much lower all-in sustaining costs. So it's going to make the company even that more profitable.
Based on that, it's like my mind immediately went to permitting, obviously, when it comes to tonnages and throughput and things like that. When you replace the ball mills, are you fully permitted for that? Do you have like free, how do you call that, like free reign on capacity there?
Yeah, so the permitting that we need for the project is really related to getting the two mines started, the Corner Bay and Devlin mine, and then to reconfigure the tailings dam. And those are the main permits. What we do within the mill really it doesn't really fall under the jurisdiction of say, the permits. We do have to permit the mill in order to produce the material to go to the tailings, but what we do within the mill is not that large an issue. I'll speak a little bit on the tailings. We've decided to go with a dry stack operation, and we're going to place those tailings on the existing tailings beach that exists. If we do that, we actually have capacity for 12 million tons of tailings. The PEA only requires 4 million tons of tailings. So again, with this project, the way we've configured it, we have a large amount of excess tailings capacity, which again means we could probably have a much longer mine life than the 10 and a half years that we have now. In its first iteration, the Chibougamau mining camp operated for 50 years. In the second iteration, which we're currently undergoing, we're currently working on, we would like to see another long run for the Chibougamau mining camp.
So let's circle back a little. Like, let's actually talk about like what went into the PA and the data. Can you summarize like when people say it's a robust PA? So I was wondering like what does that mean? Is it just economically robust, or is the data robust as well that it is based on? Can you give us a bit of feedback on the data that went to it and what you used, how many meters drilled, and other statistics?
Yeah, so the majority of the mineralization is coming from the Corner Bay property. With the Corner Bay property, we currently have about 30% of the mineralization in the indicated category. And since the start of 2022, we've actually been drilling in order to convert the inferred to indicated. Even in the inferred areas, we're getting very good continuity of the mineralization. So I think the geological information that we have is robust. This is a kind of homogeneous copper deposit, not a nuggety gold deposit. So, the viewer or the listener should have a lot more confidence in this type of resource compared to a gold type resource. In terms of the costing information that we used, all the costs were coming from late 2021 or early 22. So that costing information is up to date. We don't expect to have cost blowouts like you do see with a number of other projects. And also the scale of the project and the fact that it's really a brownfield project whereby we're fixing existing infrastructure. We're not doing massive amounts of earthworks or building construction. Most of the labor that we're going to be using is going to be sourced within the region or locally. All of those factors gives us confidence that the information going into the costing that we used is going to be robust.
Fantastic. Next steps are now obviously preparing the technical report. That'll probably keep you busy for the next 30 days, I'm assuming. If you file on the last day, that is technically possible. How are we doing on timing there? And what should we pay special attention to in the technical report?
So we're having actually a weekly call with the engineers who were managing the project on the update of the technical report. And this Thursday, we should have all the sections done from a preliminary point of view. So hopefully we won't have a mad rush to finish off the technical report as it's due. I think what the viewers or the listeners can look out for is the depth and that we looked at a lot of these analysis. So we did a very interesting trade-off analysis, for instance, on the mining, where we've decided at the Corner Bay mine to go with battery electric vehicles and ramps as opposed to a shaft or larger diesel vehicles. So that was one of the trade-off analysis. We did other trade-off analysis looking at the different tailings configurations we have, trade-off analysis of the different mining techniques, and we chose a mining technique which would essentially accelerate mine production, which was a long hole with pillar method for the upper part of the mine. And for some of the higher grade areas of the mine, we're using an Avoca method where we don't leave any pillars behind because of the high grade nature of the ore. And so those are items to look for. Something also to look for as we go forward is the highest grade area of the Corner Bay mine is not fully drilled out. And over the course of 2022, we're going to drill out the down dip extensions of that high grade area. If you recall, we had 4 intercepts over 8% copper in that area, and that area was still down dip. Another upside that we have, which we don't have in the PA, is the fact that we do not have a silver resource currently at the Corner Bay deposit. And we do know that there is silver in the deposit. And as we prepare the infill material, obviously we're assaying for silver, and we can look forward to the inclusion of silver in future resource updates. So there's actually a lot of upside with this project. It's a solid project. It's in a great jurisdiction, being in Quebec, being in Canada. We're building up a very capable team in terms of the execution of the project. The town of Chibougamau is extremely happy to see mining return within the city limits. And we're basically firing on all cylinders, looking to advance the project to the next phases.
Fantastic. I got to follow up on the ESG part, on the E part of the ESG. You said battery powered vehicles underground. Like, what's the cost comparison? Now I'm curious. Like, I'm not sure if you can share those details just yet, but I'm curious. Like, what is the trade off? Because obviously you need probably less ventilation underground because you don't have the exhaust. Yes. But I'm curious, like, what are the details of that, and how does that reflect in the cost per ton as well?
Yeah, so when we looked at that trade-off, the first trade-off we did was between a shaft and a ramp. And the mine's pretty deep. The mine goes down to a little over 1,000 meters deep. So originally we thought maybe a shaft would carry the day. However, the capital costs, and there's some execution risk as well with a shaft, that led us towards going with the truck. And then when we looked at the 50-ton diesel trucks versus the 42-ton battery electric trucks, the battery electric trucks won the day. And there's one interesting subtlety in that the battery electric trucks use the batteries as a service. So the original equipment manufacturer is on site, and he has a kind of a fleet of batteries that you change out into your trucks. So we never buy the trucks with the batteries, because the batteries are actually by far the most important capital item in a battery electric truck. So that will bring down the capital cost of the battery electric trucks so that they're actually probably cheaper than a 50-ton diesel truck. And then the battery electric trucks with trolley assist can ramp up quicker than a diesel truck. And therefore, you have more productivity from your mine. And then finally, as you mentioned, with the battery electric trucks, there's less ventilation requirements. And in a deep mine, that adds a lot to the cost. So a lot of those factors piled up together result in that battery electric trucks with battery as a service was the most economical option for our mine. I would say if Corner Bay was a 30 or 40 million ton deposit as opposed to a 10 million ton deposit, maybe in that case, a shaft would be the most economical alternative.
Interesting. Yeah, I appreciate you sharing those details. It's something I haven't heard too much about, and especially cost trade-offs in that regard in battery as a service. That is quite interesting. What are the next steps now? Obviously, you're finishing the PEA, but how are you going to follow up the PEA now? And what do you need to do to get to PFS or even a bankable feasibility stage?
So we're currently doing the infill drilling that's required to get the higher grade portions of the Corner Bay deposit into the indicated category. That's really the major step that's required in order for us to advance to that bankable feasibility study. The other steps that are required is that we have to build up the project team, and we're currently talking with a number of candidates. So I'll do a little plug. If you're French speaking or want to learn French and you're interested in moving to Quebec or Chibougamau and you want to work on an exciting underground mining project, have I got a good deal for you?
What is it?
So, other than
HR at
that,
DoreCopperMining.com?
that's right. I don't have that set up yet, so just contact me directly.
Okay.
And then the next step is obviously the project has a lot of components and a number of moving parts. We have the two mines, we have the mill, and we have the tailings area. So we're going to make sure that we properly define the work plan that's required for all those areas, and then we'll go out and we'll look to commence the feasibility study based on those elements. And the other thing we're going to have to think of is what type of early works we would like to do. Maybe we want to put in an order for a certain piece of equipment that have a long lead time. Maybe there's some kind of general repair work we want to do at the site before we move forward. As you know, this is a brownfield opportunity. So everything that we need is essentially already in place. And really what we're doing is we are rehabilitating it and fixing it up and restarting it. It's not as if we have any massive construction builds to do on this project. So those types of opportunities lend itself to doing some early works, doing it slowly with our own personnel, which ends up being a lot more cost effective than doing it in a rush when you're executing a project, because the timing of everything becomes so critical. As we know, time is money, and we have time on our side.
A bit of a cheeky question. Could you use flow-through credits for your decline and pretend it's an exploration drift or an exploration
Um,
decline?
There's CEE, which are exploration expenses, but there's also CDE, which are development expenses, and for sure we can use the flow through for that. So that's something that we're looking at. And for the Joe Man deposit, the exploration drilling that's coming up, we plan on using flow through for that.
Okay, fantastic. What's the budget for the next 12 months? Let's to get to that next stage.
Yeah, the budget is between $5 and $10 million. So pretty modest budget. We currently still have $5 million in the bank, and we have some exploration credits coming to us, totaling about a little over 2 million. So we're at about $7 to $8 million working capital right now. So we're not in a rush to raise any money, but we will be raising some funds to make sure we can get to the end of the feasibility study. And also, all during that time, we'd like to continue with other exploration targets on our land property. The PA only includes 3 of our deposits, but in fact, we have 12 deposits. And of those 12 deposits, I would say 9 or 10 of them are very prospective in terms of exploration. So we want to continue doing exploration of our other deposits on the land package while we're concurrently as we're doing the feasibility study, because we have the room in the mill and we have some very high grade targets that still need to be drilled out.
Fantastic, Ernie. Great conversation. Really appreciate the update on the PEA here. Really detailed, and thanks for entertaining my questions about the E part of the ESG and the battery as a service part. That was really informative for me as well. And thanks for joining us. We'll have you back on as soon as you come out with some more exploration results. And looking forward to seeing the technical report.
Thank you very much, Kai. Pleasure talking to you, and wishing your viewers an excellent summer season.
I think it's going to be good. I'm looking forward to it. Gold has been recovered, so it's copper is looking up. So I think we'll be okay. I hope. Like, you never
Yeah,
know.
we should be okay market wise, and it looks like things COVID wise are returning to normal, so or closer to normal. So wishing everyone a really good return to kind of normalcy.
Fantastic. Everybody else, you heard it from Ernie. All the best. Thank you so much for tuning in. We'll be publishing more interviews from Vancouver Resource Investment Conference last week. And of course, again, quick reminder, join us here in Frankfurt this Friday and Saturday at the Deutsche Goldmesse at the JW Marriott Hotel. We get some excellent keynote speakers, fantastic companies joining us, free to attend, obviously, as investor. Make sure to visit deutschegoldmesse.com, and can't wait to meet you in person. Thanks so much for tuning in. And Ernie, we'll speak soon.
Okay.